I think the general consensus is around 5%.
The recovery in China will come at a good time for the global economy.
2022 for us was a record year, and we do expect 2023 still to record growth.
It's good to have executives from multinational corporations to join me for today's CEO Roundtable. The two sessions around the corner will be held in Beijing in early March, and also the year of 2023 is a new year after the nation optimizes COVID-19 measures. And now we're discussing how to have businesses of companies and also business of China to back on the growth track. What's your outlook for China's economy and your company's operations in China? First, Peter.
Well, we are quite optimistic. Our base case is a growth of 5.5%, and we think there are substantial possibilities it could be even higher. We do see that most of the supply chain problems have been solved. If we look at freight rates, container rates, they're actually now back below the levels of 2019, so transportation seems to flow smoothly. Restaurants more full than they were in 2019, so I think that's a good sign. And I've also spoken to some European retailers who are reporting that their stores are more or less as filled as they were also in 2019, of course with some changing consumption patterns. But we're looking positively upon this year. Very positively, I would say.
Well, I would say the general view on the market economy in China is very similar. We are quite positive. I think the general consensus is around 5%. I would say it should be achievable. Even during COVID, our industry has been very strong, and I would say the past 3 years in China have marked a significant growth. 2022 for us was a record year, and we do expect 2023 still to record growth. Probably in the low double digits, but still a very positive outcome for this year.
Yes, so we at Deutsche Bank, our economists have lifted our forecast for economic growth in China this year to 6% above consensus forecast. In the next 2 quarters, it's mainly about cyclical recovery of consumption. But actually in the medium term, we're also positive on recovery of property sales, which is a very important. We do think that the recovery in China will come at a good time for the global economy. This year in China, we estimate there's around 20 trillion of excess savings that were accumulated over the last 3 years during COVID. And as this money comes back to the market and is put to work, we do think that will support our bullish view on the economy.
Okay, thank you. And like we've talked about earlier, the many high-level meetings have highlighted the expanding domestic demand and boosting consumption. And it will also be a major focus of this year's 2 sessions, which many experts said would generate a lot of benefits in different sectors. And what are the key words will you expect to hear during this year's 2 sessions? And what benefits will there be for China's move of expanding domestic demand?
Into both solar and wind power, and we expect that to continue, and we think that's an area which is going to be important for European business and also for ourselves. So those are some of the themes we'll be looking for.
My expectation is that we will see further actions for further policies to push more mechanization, a better mechanization. I think especially in the last few years there has been a strong push on technology. We know China aims to become a digital superpower. We have seen a lot of movements in this area, also in agriculture. Our machinery is becoming more and more sophisticated and interconnected.
China has made very important commitments towards carbon peaking and carbon neutrality. Last year we already saw the People's Bank of China rolling out its carbon emission reduction financing tool, where we had the opportunity to participate. And I think this year a key focus is as well transition finance, helping companies in more polluting sectors to move towards a more sustainable business model. And we could see this year the announcement of a transition finance taxonomy, which would provide a strong policy framework for companies to rely on when they raise financing in the market.